Welcome to this week's live strategy session. Great to have you with me. Lots of good stuff to go through today. As always, we're going to start with that ASX 200, a bit of movement in that this week. Also, we've got the small ordinaries, we've got the commodities. I'm going to go through gold, copper, oil. I've got uranium in there, which is doing amazing stuff. And I've also got a couple of stocks to talk to you about, which are looking pretty interesting as well. And as always, everything today is general commentary only, no personal advice here. You got to go get personal advice separately. So having said all that, I think it's time we get into that first chart. It's been really quite a bit has changed in the last week. And so last week when we were talking, everything was pretty quiet. There wasn't a whole lot going on. The ASX 200 has spent a couple of weeks going sideways in a narrow band. And then with a flurry of activity in the second half of this week, we've seen a bit of movement. And what we've seen really, so we've had this pullback, but I don't think it should come as any great surprise, because we really have been discussing this possibility over the last few weeks. So the facts as they are is we had this strong rally off the October low. We had a market that was overextended and at a key resistance point. So that key resistance point, of course, being this all-time high region at around 7,640, which the market had just come up against. So there was plenty of good reason, I think, why the market was going to pause. And typically what we see when we do get to these key points with an overextended market, and like I've been talking about how the market had been stretched above these moving averages, the 50 and the 100 day. And when you get that situation, it's quite often the what you need for a counter trend rally or a counter trend move to kick in. And the other thing I think which is interesting to also look at is the RSI. So I'm going to put the RSI up on the chart. And this is a 14-day RSI, and we spoke about this last week in that the RSI had been up at pretty high levels, up around the 80 sort of mark, and had started to pull back. And the point I made was once this declining series, this declining process gets underway, it typically follows through back below the halfway mark, and that's what we've seen, and that's where this last leg of the consolidation has come in. So from that perspective, I think the heat's very much come out of the market, and it's now a case of like, are we going to find support at these lower levels? So let's just get rid of the RSI, just get a little bit more room on our chart. So we've also got the ASX 200 getting back to this 50-day moving average and bouncing. So that's, again, one of those things we look for, the market getting above the averages, stretched above the averages, coming back and doing some work around them, and then finding those moving averages as support, which so far that's been playing out in the ASX 200. And I also want to put on some Fibonacci's. Let's just put our Fibonacci retracements on. I'm going to use the November low for reasons I've discussed previously, in that I see this as being a complete move on its own, the rally off the November low. And when we do that, it's the price is really it's really come into a cluster of support. You've got the midpoint of the Fibonacci region. You got the 50-day moving average below. That's the 100-day moving average. So it really is a key area. And I think what we need to see happen here, we need to see the market find support. And this is where buy the dip really needs to come in and underpin prices. I think the ideal price action from this point would be some sort of a sideways move, which builds a platform up around where this 50% Fibonacci is and where the moving averages currently are, just chugging sideways for several weeks. That would be the ideal sort of price action, in that would then potentially set up the platform for another rally. And if we do get that, well, then that's also then a sign that we're getting the accumulation coming in, which then leads on to set the stage for potentially a breakout above this key overhead resistance. Look, it's not unusual to get these pauses below major levels, and the market can track sideways, build up the energy it needs to then hopefully punch through at some time in the weeks ahead. What I don't want to see at this point, what would be unhelpful for the situation, would be if this decline we've had so far built up some steam. We start going through the 100-day moving average to the downside. That would be more like the sort of price action we were seeing during 2000 or during 22 and 23, where every what looked like every strong rally was then quickly retraced. Yeah, that would be the concern if we see the market come back down below these 100-day moving averages. So look, as I told you last week, I think the setup at the moment looks constructive. I'm using wide trailing stops for my own portfolio, for my own stocks. The aim being is to see off a pullback and be positioned for a potential continuation of this rally we've had from the October lows. I'm not rushing to add a whole lot of new positions to my portfolio at the moment. I want to see how this pullback plays out over the next few weeks. But there are still some interesting stocks to keep an eye on, but more on them a little bit later on. I'm also going to tell you about what I'm also going to do. I'm going to tell you about some fascinating research I saw through the week, which could actually save you quite a bit of time on your stock research if you like to do a bit of extra digging around as well. So that's interesting. We'll get onto that in a little bit. But first of all, if you're getting value, please hit that like button. Give me a short comment. Let me know what you're thinking, whether you're enjoying how this goes, whether you'd like anything else you'd like to see. And so that helps a lot, helps the channel a lot when you hit the like button and leave comments. And now let's move on to the small ords. Then we've got the commodities. Got those couple of stocks for you. Got the gold, the uranium, all of that. Of course, that wraps up the free section. If you're not a strategy session a member, think about clicking that link in the description section and coming on board. It doesn't cost you very much, just a few dollars, just like buying a cup of coffee for you and me for putting the session together for you. So, okay, with that said, let's jump over to the small ordinary.